The goal of this exercise is to introduce you to Excel and reinforce the links between the income statement and statement of retained earnings in the balance sheet. The assignment requires you to enter formulas and to calculate subtotals or totals. We can click on the tabs below to access an income statement, a statement of retained earnings, and a balance sheet. We'll need to enter formulas for the missing yellow cells. We can refer to adjacent cells to see what those actual formulas are. Let's begin by calculating our gross profit or gross margin. Our gross profit is simply our net sales minus our cost of goods sold. Our operating income then is simply our gross profit minus our selling and administrative expenses. Our income before taxes will be our operating income minus our interest expense. Then finally, our net income will be our income before taxes or taxable income minus our income tax expense. Our profit margin. Our profit margin is our net income divided by revenues. And our question is, did our profit margin improve in 2012? In 2011, we made 4.3 cents in net income for every dollar in sales. In 2012, our net income of $127,000 divided by our net sales gives us a profit margin of 3.1%. So select yes or no for did our profit margin improve. Our average tax rate is simply equal to our tax expense divided by our taxable income. And again, answer the question, did our average tax rate increase or decrease between years? Next, let's work on our statement of retained earnings. Our statement of retained earnings, remember, is our beginning retained earnings, which is the balance from the prior year. So link it to the ending balance for 2011, plus our net income, so equals. Click on our income statement tab, then go over to net income, cell C16, hit enter, and we've picked up our net income. Our dividends are already there, so let's go ahead and calculate our ending retained earnings. That's our beginning retained earnings plus net income minus dividends. So our ending retained earnings are $2,320,571. We're going to want to make sure this number gets picked up and linked to the balance sheet. Let's go over to our balance sheet. To calculate our total current assets, simply equals sum, parenthesis, and then we can highlight the cells. Okay. If we had the menu bar displayed, we could have typed the sum function over here, and it automatically highlights the cells above it. If those are the ones we want, then we can hit enter. Okay. Our total assets, let's use the sum function. This time it didn't pick up all the cells we want. We want to make sure we pick up the one above it. Hit enter. Current liabilities, again, we can use the sum function, or we could just simply equals other current liabilities plus our accounts payable. Our total liabilities will be our long-term liabilities plus our total current liabilities. Our retained earnings, we want to make sure we link this to our statement of retained earnings. So equals, click on our statement of retained earnings, click on the ending retained earnings balance. Now we can get a subtotal for stockholders' equity. And again, let's just use our sum function. Treasury stock represents shares of stock that Abercrombie & Fitch have repurchased. They reduce stockholders' equity. And it's already as negative numbers, so we can just simply add these two numbers together. We have total stockholders' equity of $1.8 million. Finally, we want to pick up total liabilities and equity and make sure that that agrees with our assets from above. So stockholders' equity plus our total liabilities. We've got $3,048,153, which agrees with our total assets, so our balance sheet balances. Let's go ahead now and calculate our financial leverage ratio or asset to equity ratio, and that is simply going to be our total assets, 3 million, divided by our total stockholders equity of 1.8 million. And we can see our asset to equity ratio this year was 164%. And looking at last year's ratio of 156%, that means that we had $1.56 in assets for every dollar in equity. And we can see that from our accounting equation, then we must have had 56 cents in debt. So our question is, did our financial leverage, or the amount of debt that Abercrombie and Fitch used, increase in 2012? And we can just select increase or decrease from our menu.